Welcome back, my friends. There have been ongoing developments in the cryptocurrency market. So I am updating you more often on this subject because it is a rapidly changing situation. Cryptocurrency exchange company Genesis is reported to be preparing a bankruptcy filing. Genesis is the lending arm of Digital Currency Group, and it may be unable to come to an agreement with its creditor groups. So it looks set to become the latest in a series of crypto sector bankruptcies. As you probably know if you follow this channel, cryptocurrency exchange FTX filed for bankruptcy in November. And the fallout from the FTX bankruptcy has sent shockwaves through the cryptocurrency world. Fears of crypto contagion are growing as the financial status of other crypto companies wobble. Wall Street investors are fearing contagion from the FTX collapse. And there are a number of cryptocurrency companies on the daily watch list. Coinbase, Binance. The crash in cryptocurrency prices has investors on edge, fearing the worst. So there could be a long line of dominoes waiting to fall. But where will it stop? What is the real value of Bitcoin, Ethereum, and other cryptocurrencies? What does this mean for the US economy? And what does this mean for the future of the United States? But before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. According to Bloomberg, crypto lender Genesis Global Capital is preparing to file bankruptcy as soon as this week. Genesis, a subsidiary of Digital Currency Group. The company has been in negotiations with various creditor groups. They are attempting to remedy a liquidity crunch. Genesis had a rough year in 2022. It started when crypto hedge fund Three Arrows Capital defaulting on a $2.4 billion loan from the firm. That was following the collapse of the Terra crypto ecosystem. For those of you not familiar, the Terra ecosystem is a cryptocurrency and blockchain platform. Terra is designed to enable fast, low-cost transactions for both online and offline merchants. It is designed to be a stablecoin system that is pegged to a basket of fiat currencies and assets to provide a stable value. The platform also includes a decentralized exchange, DEX, and a decentralized application, DApp, platform for developers to build on. The native cryptocurrency of the Terra ecosystem is called Luna. Genesis filed a $1.2 billion claim against the Terra ecosystem. From August to October, at least 6 high-level Genesis executives quit their jobs. Then crypto exchange FTX filed for bankruptcy in November. Genesis paused withdrawals on its now-defunct Gemini Earn. Gemini Earn ran in conjunction with Winklevoss twin-owned exchange Gemini. Investors have yet to get their more than $900 million in assets back. Last week, the Securities and Exchange Commission charged both companies with selling unregistered securities. Earlier this week, Genesis laid off 30% of its staff. At least one report said that Genesis is discussing a prepackaged bankruptcy plan with creditors. A prepackaged bankruptcy is one in which the sides would land on a restructuring agreement prior to any official filing. The deal would then be finalized in bankruptcy court. Most reports say that the Genesis bankruptcy filing could come as soon as this week. Actually, it has been teetering on the brink of bankruptcy since November. During that time, it has been trying to raise nearly $1 billion in funds. This comes days after Digital Currency Group, the parent firm of Genesis, suspended quarterly dividends. This was a means to preserve liquidity and reduce operating costs. In addition, the crypto lending platform has been in a constant battle with Gemini. Gemini is a leading crypto exchange. At issue is the suspension of withdrawals on Genesis. Withdrawals were suspended in November as a result of the FTX collapse. Since then, Gemini's Earn users have been unable to access their funds. The crypto exchange had nearly 340,000 users participating in its Earn program. $900 million of user funds are still locked in Genesis. Genesis Global Capital has been fighting with Cameron Winklevoss, CEO of Gemini. Winklevoss called for the removal of Barry Silbert from the position of CEO. Moreover, the TIF was met with the intervention of the U.S. Securities and Exchanges Commission, SEC. The regulatory body levied charges against both platforms for selling unregistered securities. The action came despite Gemini's efforts to work with the regulatory body on its Earn program. A recent report by the block states that the creditors of Genesis, including Gemini, are negotiating a prepackaged bankruptcy plan. Under this, Gemini and other creditors would receive cash and equity in DCG for giving a forbearance period of up to 2 years. Genesis owes creditors billions. Specifically, Genesis is liable to pay creditors over $3 billion, including Gemini users. The company is considering selling some of its assets to raise capital to pay its creditors off. It currently has about $500 million in investments. Digital Capital Group had invested in nearly 200 crypto projects. That includes banks, exchanges, and cryptocurrency custodians. As you might imagine, there are fears that the collapse of FTX will lead to more destruction in the cryptocurrency world, and create a contagion that might hit almost every crypto investor in the United States. That includes everyone from individual investors to major Wall Street institutions. Genesis is experiencing liquidity problems as investors pull funds from their cryptocurrency accounts. If it does not manage to quickly raise a significant chunk of cash $1 billion, it could have to file for bankruptcy. And there are more ominous signs. Gemini has suspended redemptions of customer funds from their accounts. It has also stopped originating new loans. Crypto contagion is a real possibility in the decentralized blockchain system. And since digital currencies are unregulated, there are virtually no investor protections. Cryptocurrency companies are not bound by standard accounting procedures and controls. That means that these companies can be tangled up with one another in unclear and unprecedented ways. For example, FTX had deep ties with about 100 other crypto companies around the world. And, as we are hearing from the FTX bankruptcy, it had more than 1 million customers. That paved the way for its financial troubles to spread quickly. Prior to its collapse, FTX bailed BlockFi, another cryptocurrency company. But the collapse of FTX stretches well beyond companies and investors with direct exposure to FTX. The spectacular implosion of FTX has stoked volatility in cryptocurrency ecosphere. And it has led to collapsing values of cryptocurrencies and Bitcoin. Remember, FTX was valued at more than $30 billion earlier this year. That is causing a major wave of panic. Gemini Trust partnered with Genesis. And Gemini account holders pulled more than $400 million out of their Gemini accounts. If you recall, Gemini was founded by the Winklevoss twins, Tyler and Cameron. And Gemini briefly suspended its yield-paying program that was backed by Genesis. So, the failure of Genesis could cause the collapse of Gemini Trust. Binance and Coinbase are two other cryptocurrency exchanges that are, for the moment, still operating. But both have experienced sizable drawdowns recently. Genesis has apparently reached out to both Binance and Apollo Global Management in search of new investment. But neither Binance nor Apollo Global Management responded to a request for comment. But, this might still be just the tip of the crypto crash iceberg. As I am sure you know if you follow this channel, Coinbase is one of the few remaining cryptocurrency exchange companies. Although it is still operating, Coinbase had a disastrous 2022. In fact, it has laid off hundreds of employees. And the FTX bankruptcy is casting a shadow of doubt over the entire cryptocurrency world. Coinbase is now caught up in the contagion. And so is the leading cryptocurrency, Bitcoin. Shares in Coinbase continue to fall as the Bitcoin slide continues. The health of FTX's rival exchanges has now come into question. It has sparked industry-wide sell-offs and some companies have suspended trading. Some cryptocurrency companies are preparing their own bankruptcy filings. Prior to FTX's bankruptcy, the market was in the midst of a crypto winter. Bitcoin and Ethereum were falling in value and had enforced a number of crypto companies into bankruptcy. In its Q3 earnings call, Coinbase reported a revenue plunge of more than 50% in Q3 as compared to Q3 of last year. Coinbase also reported a loss of $545 million in Q3 alone. Back in June, the cut 18% of its employees. Wall Street reacted with a violent sell-off. But, as I am sure you know by now, not everyone believes in the future of cryptocurrency. Most notably, New York University professor Nouriel Roubini. Crypto and some of its major players as an ecosystem that is totally corrupt, said economist Nouriel Roubini. Recent turbulence in the crypto market has resulted from highly risky crypto investments. That also includes unsustainable borrowing and lending by crypto companies and related investment funds. Many experts are fearing that the contagion could spread to topple other major players. For example, Crypto.com. The CEO of Crypto.com has denied this. Different countries have taken varying approaches toward oversight of crypto firms. The cryptocurrency industry has ballooned in size over the past few years. Bitcoin sunk to just under $16,000 for the first time in recent memory. If you recall, Bitcoin peaked at an all-time high of $68,982.20 in November 2021. Warren Buffett, CEO of Berkshire Hathaway, has repeatedly said that cryptocurrencies are worthless and have no intrinsic value. Buffett says that cryptocurrencies have no value in the economy or to society. He clearly thinks that the current crypto winter is a prelude to the eventual death of cryptocurrencies. In January, few people would have predicted that this crash would happen. Regular people who never even traded stock were suddenly active in crypto trading. Cryptocurrency, by its very nature, is ungoverned and unsponsored by any country. There are no banks involved in the system and there are no regulations. But, what do you think? Please hit the like button and leave a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.